Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Wednesday, March the 7th. Well, we did get that consolidation day that we were expecting. Markets tend to usually sidestep higher, grind higher on no volume after a big push up, and sure enough, that's what we got yesterday. Real quick, Nasdaq down 3. S&P up 1, Dow up 42. We did take a couple interesting events did happen yesterday, and one was the Nasdaq and the Russell still lagging the S&P, which is not what you want to see if you're a real bull, right? You want the Russell, Nasdaq, and obviously the transports rally. Well, all those three leaders lagged the S&P yesterday, so that's interesting. We need to take a look at that. Copper also down lower. Okay, S&P is chugging along. It looks like as you know, the short-term resistance is really about 1550. Looks like it wants to get there in the near future. So if it does, let it get there. There'll just be a better short later on down the road. Another interesting event. The GDX Gold Miners Index actually had a real nice day yesterday, put in a bullish engulfing candlestick. I did mention that to you yesterday and the day before. I am looking for a long GDX trade, and every time you have the gold miners and the gold stocks rally prior to the precious metal itself, that is a good sign, because that's what usually happens. And if gold just put in a plus $5 yesterday, really starting to wake up. And I have a bunch of trades in a bunch of stock trades, charts in gold, which I want to show you. So event risks, we have initial jobless claims, and we do have the ECB and the European Central Bank and central bank speaking today on interest rates. So this is something that really need to pay attention to. That could be a market mover as well. And the non-farm payrolls on Friday. Okay. Now let's get into some of the charts. I just want to show you the NYMO. As you can see here, we're still stuck in this range, plus or minus 20 points. We're still up, still have room to run to the upside and room to go to the downside. So we are not overbought yet in the NYMO. So that's kind of crazy that we still have much room to run. So this breadth indicator is telling us that there is room to go to the 1550. Although we are overbought, and our momentum indicators are telling us that we're overbought, this one is saying that there is a little bit push to the upside. So that's where we're probably likely headed, to 1550. Now, take a look at the dollar. The dollar gained, had a nice little move to the upside, big engulfing candle. This is overbought, as you can see here, and show you the RSI. You can see that's overbought. And our ratio chart to the S&P is still chugging along down here. Stochastics are, again, way above 90, nosebleed section. So this is due for a pullback. And if this does start to pull back a little bit, I think we're going to have another push higher in equities as well. And again, you have to just be patient and be selective on your trade setups. It's very important to get through this until the markets start to pick up some volatility here. Just be selective. 2-3 good trades a day. One trade a day, a good trade, can at least put money in the bank. All right, now I want to show you some of the gold stocks here. But before that, let me just show you copper. And this is why I don't like what's happening here. Copper diverging away from what the markets are doing. Now, the dollar has some strength, but the dollar, we're looking to pull back in, so that's going to put a bid into gold, precious metals, and of course equity. So be some sort of risk on type effect, which we didn't have risk off yet, right? So this is where what this is concerning to me, how copper is really lagging, as well as the Nasdaq, the Russell, and the transports. They lagged yesterday anyway, at least for one day. But this is something that's a concern. We're going to keep monitoring to see what happens here. All right, so now let's take a look at our GDX. I have a couple of charts here. This is the GDX GLD ratio chart, and draw some trend lines here. A break above this 20 EMA would give you a real confirmed buy signal. We did bounce off of S1 here, as you can see, and we're starting to curl on our MACD. Again, needs a little more work, guys. One day is not a trend. However, it's a good start for a base building in the GDX that we can actually catapult higher. Okay, take a look at the GDX with the Bollinger Bands. As you can see here, we hugged just the band on the outside, and we had a consolidation day yesterday. 2 days ago, and yesterday we had that takeoff, that bullish engulfing candle. Now up on top, the bullish percent, GDM, as you can see, really has not produced a buy signal up until I believe it was last July. So we have literally been in the sell signal since September, and we have traced down all the way. And now this is really what I'm looking for a buy signal in a GDX. Now, this could come later, right? Because the GDX can follow through today, produce the buy signal, and pull back a little bit. And this here would still be on a buy signal. So this is what I'm looking for today. I like to take a little bit more time, let it build a little bit of base, consolidate another day or two before the next rally. I never like getting in too early because you tend to get stopped out a little too much. Now, let's take a look at the GDX. This is the bullish percent with the GDX. Now, this is not plotted here, but I just want to show you how this is still on a sell signal, looking almost ready for a buy. Today, if GDX rolls, if GDX pushes higher yet again, then the bullish percent will probably go on a buy signal today. But it's just something that we're going to need to watch here. Take a look at gold in itself. This is the spot price of gold, end of day. We are on this channel, and this is where this thing gets really interesting. We really need to see gold hold this area. Otherwise, it'll test the low, and ultimately, if it does break that low down here back in 2012, then we'll get a huge flush. Now, if it can sustain this area up above 1550, 1575, then I think we'll have a real nice big push to the upside. Now, take a look at the Huey. This is a gold bugs index where a lot of the gold bugs, as you know, if you follow gold a lot, gold is sort of like a cult following. People think gold is the best asset class to buy and continue to buy. But I want to show you something interesting here. And this is the Huey, the gold bugs, the Amex gold bug. And this is a weekly chart. So today's Wednesday, so there's still 3 more full days of trading. But look at what happened back in 2009. And if you look over here, we've got extremely oversold. And look at the rally, right? Now we're back in 2013 here. And look at where we are now in the RSI, oversold. And we hit the 61.8% Fibonacci retracement right to the penny. Absolutely incredible. So this is what kind of concerns me, is that our MACDs is really just open like a waterfall. So this is going to need to turn back up again to really get something. But this is a nice little sign. Now, if we can continue to trade above the 61.8% retracement, then I think that gold can actually make a big turn to the upside. Now, again, guys, it could push lower and really fake everybody out, and that's why I don't like to get in too early. But it is a good sign that gold has at least from yesterday put in a nice bullish engulfing candle. And this is what I'm looking at. This is the GDX now off the Ninja chart. Now, as you can see here, we have a bullish fallen wedge. And I put the little triangle, rectangle formation down here. And what this is, could this be a possible inverted head and shoulders? Now, if so, and again, this is just my theory here. If so, this would act out perfectly, because what usually happens in a bullish fallen wedge formation, they usually produce an inverted head and shoulders coming out of that. So this is really interesting. And if I go like this here, this would be the neckline, would be right up in here. If you can see, let me just put this line up here. Excuse me. This horizontal line would be the neckline. And this is something that I'm watching here. Now, again, you still could be in it, right? And then looking for that pullback would be the add on the higher low from the low. And then we should get some sort of explosive move to the upside out of this bullish fallen wedge. Again, this is just my theory, nothing to trade on, but it's interesting to see how this looks like it's panning out. All right, let's run into the index charts. Really nothing to show you. I just want to show you a spider 15-minute inside day here, guys. We did gap up a little bit, pull back into main pivot of a 15-minute chart, and we just said sideways. And this is to be expected. So today, tomorrow, with some event risks that are planned, we could have either a push higher, which I would suspect, if anything, we're going to get a break higher to a move of the 1550 in the S&P. All right, spiders, here we go. Really an inside day. Really never took out the previous day high. Look at the volume, though, just deteriorated from this low. This is not a good sign. But nonetheless, we are drifting higher. So you got to pay attention to what price is doing. Here's our 60-minute spiders, 149.80, still a valid support. 150, 150, I still like to break. But now we have new areas of support, which is going to be this area here, 153.20, call it. We do have a little bit here. I like to even take this down, actually. Matter of fact, you know what? This is going to be a little bit more valid point of support. And this is going to be 152. Call it 153. That's going to be a gap area of support down below from here to here. So 153 will be a new area of support I'm watching for the spiders on the 60-minute chart intraday when I'm trading. Okay, spiders 30-minute. Want to show you the Bollinger Bands again. We are pinching now that we have a 2-day consolidation. Ready for another move. We do not know where this move is going to break out or down, but more than likely, if the trend's been breaking to the upside, more than likely you're going to get one more push higher. So watch this 30-minute Bollinger Band on the spiders. S&P 500 cash daily, 1550 is next resistance. I have it marked up here. 1530 would be your next support, which was resistance, and then of course 1495. Okay, I'll change this tonight for tomorrow. And our downside target still is the 1475, and our is one of them. And then that would be really right around the 50% retracement. Then we really need to reevaluate. 1454, not too sure if we're even going to get down there. At least not yet. Maybe sell in May, go away type mentality. We might get down in these areas here. But like I said, with the Fed continually pushing their stimulus and pumping liquidity into the markets and retail buying the market up at these areas, I don't think you're going to see a move like that. Not until that sell in May, go away type mentality. But we'll see. Transports here, inside day from the previous day. Nothing really to tell you guys. Market analysis is really nothing from today. We'll see what happens today and tomorrow. Non-farm payroll is going to be very interesting. IWMs, as you can see, lagging here to price of what we're doing from the previous day. Diamonds again pushed higher, but actually, diamonds and the S&P are leading yesterday. The charge higher, but you can see we're just gapping up here. So this is going to be unsustainable at one point. So we're going to really need to see what happens with the market in the coming days. Now the XLF, again, weakness in the XLF. Big gap up, 2 doji candles, was indecision. So we'll see if we do take out the highs. Now, to me, excuse me, I do think this is going to put in a short trade relatively soon. This is not a short trade as of yet. It still needs some work to do. And if you see, if I could just pull this, get the line right about here. A break back out of this rising trend, bearish rising trend line up in here in this area, and back in this wedge, then I would think that would initiate a good short, because good risk reward would be the high of that break higher and fail. And then entry would be the low of that previous candle. It hasn't happened yet, so just make note of that, okay? And I'll bring that along. Apple, one-hit wonder yesterday. The previous day, obviously, we took almost 2/3 of it back. Like I said, guys, stay away if you're looking for build a longer-term position. It is not ready yet. I'm sure you're going to get below 400, which would really entice me to start looking to build a position in. But this is just a day trading stock for now. Lastly, the Qs. As you can see here, we did break back up out of this range, and now we just had basically an inside day falling back below it. So technology is looking ripe for some sort of a buy-in. Not yet. I do think it needs a little bit more work. Keep an eye on the ECB. Discussing later this morning. Initial jobless claims 8:30, and don't forget we have non-farm payrolls come out at 8:30. So if you are holding positions or you're looking to swing trade, be careful, because 8:30 numbers come out and it could really mess up your trade. Have a great day, everybody. We'll talk to you tomorrow. Take care.